Welcome. In this video, Xcn coin, big breakthrough has finally arrived. We will analyze it. Don't forget to subscribe, and please watch to the end to understand. In previous analyses, we specifically highlighted the major descending trend line that has long exerted pressure on the price and played a critical role in direction determination. This trend line, which had become a symbol of negative sentiment and uncertainty in the market, has finally been broken. Despite numerous attempts, the price had failed to make a strong breakout above this resistance line and was repeatedly pushed back by selling pressure. However, now, this strong technical barrier, one that has held firm many times before, has finally been breached, signaling a very encouraging development for the market. Trendline breakouts are highly significant in technical analysis. Especially when it comes to long-standing and clearly defined trends, such breakouts have profound implications not only for price direction, but also for investor psychology. These structures often signal the start of a new era. It suggests that buyers are now becoming dominant, selling pressure is weakening, and a foundation is forming for the price to move freely to the upside. Looking at the current setup, the price breaking through this major descending trend line to the upside could be the first signal of a potential new bullish trend. A breakout from such a strong descending trend line is rarely limited to a short-term upward move. Typically, after a breakout, there's a pullback process known as a retest. During this phase, the price returns to the trend line that previously acted as resistance and tests it as support. If this test is successful, meaning the price holds above the trend line, it increases confidence in the strength of the breakout and provides a much stronger signal that the upward move will continue. The fact that the price is currently in a zone where it may be entering this potential retest phase is a critical technical detail that should be closely monitored. Additionally, the psychological shift that can occur in the market after such a breakout should not be overlooked. Prices that have remained within a downtrend for a long time tend to erode investor confidence, causing many to hesitate in opening new positions. However, when this descending trend line is broken, it also breaks a psychological barrier. Investors begin to take the possibility of an uptrend more seriously. This encourages new buyers to enter the market and contributes to increased volume. Higher trading volume, in turn, helps make upward movements stronger and more sustainable. It's also important to remember that price movements following trendline breakouts often involve retesting previous resistance levels. In other words, in the coming days, the price may target previous highs, and if it closes above these levels, new all-time highs could come into play. This would further strengthen the bullish trend. In light of all these developments, the fact that the price has broken out of a major descending trend and may be entering a potential retest phase is a highly strategic technical event. This breakout is not just about surpassing a trend line, it also signals a major shift in investor perception. The market may now be focusing more on upside potential rather than downside risk. If this breakout is supported by volume and the price turns upward again after the retest, a new bullish phase with serious medium and long-term profit potential could begin. In conclusion, the fact that this major descending trend line we analyzed in detail previously is now behind us marks a significant milestone in terms of technical analysis. As the price moves past this key barrier with strength, it is beginning to inspire investor confidence. All eyes are now on the possible retest following the breakout and the potential upward move that could come next. If the price successfully completes this process, we may witness the beginning of an entirely new bullish cycle in the market. This would offer investors a strong opportunity to take positions and pave the way for the price to reach much higher levels in the future. But we can't make decisions based solely on trend lines. Let's take a look at the other metrics as well. Stay tuned. One of the most exciting and eagerly anticipated phases of the Elliott wave theory, the transition into the third wave, has clearly begun to emerge in our analysis. When looking at the overall structure of the price movements, there are strong indications that the second wave has completed, signaling that the third wave is now starting to take shape. As you know, in Elliott wave principles, the third wave is typically considered the strongest and most high-volume wave. During this phase, we usually witness a significant positive shift in both buyer sentiment and investor psychology. The fact that the second wave completed as a corrective phase makes the potential of the third wave even more meaningful. When we examine technical indicators, the acceleration in price along with increasing volume is among the signals confirming this transition. According to our measurements using Fibonacci extension levels, the potential targets for the third wave are at the 1,618 and 2,272 levels. These two levels are generally considered natural target zones for the third wave, and reaching them would be a technically healthy development. In particular, the 1,618 level is defined in Elliott theory as the minimum third wave target. Reaching this level indicates a rise consistent with the norms of a third wave. If the current momentum continues and the market structure remains positive, we could see a stronger upward movement toward the 272 level. These types of targets reflect not only price-based developments, but also growing investor confidence and market sentiment. As long as the current price action continues to respect the upward trend lines, it is highly likely that the third wave will gain upward momentum. When analyzing the market structure, it's evident that levels which previously acted as resistance are now functioning as support, creating a strong foundation for the price to move more freely throughout the third wave. Especially as the price continues to close above previous peak levels, these areas are turning into psychological support zones and laying the groundwork for further upward movement. The characteristic sudden acceleration and rapid rise commonly seen in the third wave are also being technically supported. Of course, one of the most important factors to watch in these types of moves is whether the market can digest the movement and maintain continuity. However, based on the current outlook, it appears the price has started this third wave with strong momentum, and investors are positioning accordingly. This suggests that the price could continue on a positive path, not just in the short term, but in the medium and long term as well. Overall, entering the third phase of the Elliott wave theory represents a major opportunity for momentum gain in the market. When technical analysis data, indicator signals, volume activity, and price formations are reviewed, it's clear that this move is not random, but rather the beginning of a structured and well-founded upward trend. For investors closely following this process, this could be a highly profitable period. Because the third wave is the most distinct and decisive part of the trend, staying positive during this phase and taking action based on thorough analysis is very important. RSI, one of the most followed indicators in technical analysis, has given a very remarkable signal for the moment. The RSI, which has been sticking to a downward trend line for a long time, was going through a process in which investors acted cautiously. However, recent developments suggest that this downtrend is now over. The RSI has broken the trend to the upside and may herald the start of a new momentum. This development can be considered as one of the first signs of a potential uptrend in the market. Such downtrend breakouts are often the precursors to big price moves on the RSI. This is because the RSI's trend reversal indicates not only short-term movements, but also a positive shift in market psychology. For some time now, the RSI has been stuck at a certain resistance line, with every attempt to rise limited to this line and then retreating again. But now, this resistance line has been clearly broken, and the RSI is no longer bearish, but has started to show upward momentum. This kind of breakout is often referred to as a momentum reversal, and often signals that the price will similarly change direction. RSI is huge for trend breakouts. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.